So Mike Begg here, beat the banks in Spain. So more about our free check, and this time it's life insurance. Now this is quite a big subject, so what I'm going to do is split this into two parts. So the first thing to say about life insurance as sold by banks in Spain is it's stupidly expensive, and I mean stupidly expensive. It starts off at around about 6 times the price of what you can buy similar cover back in the UK. Now, so why do I say starts off? Well, the reason I say that is because it's a reviewable, renewable policy every single year. So what does that mean? It means that even if you have reducing term cover for a repayment mortgage, the price goes up every single year. Incredible. What else? Well, it's typically used as a bargaining chip by banks. So let's just say you need a Spanish mortgage, you either go to the branch directly or you go through a broker. This is kind of typically what they do. They'll say, oh, well, we know that you'd like to borrow 200,000 euros. Unfortunately, we can't really come close. We're stuck at 160 for whatever reason it might be. And they'll say, but if you want to take our buildings and contents insurance and our life insurance, we can get maybe to 190,000 euros. And as we're such great guys, you know what, in cognisance of the fact that you've taken this cover, what we'll do is we'll reduce your rate by maybe say 0.5%, 1/4% for however long it may be. But of course, completely unbeknownst to you is the amount of commission that they're making from you by the sale of the buildings and content insurance and the life insurance for the whole term of your mortgage. What's the other thing? Well, because it's annually reviewable and renewable, it means that if things happen with your health in between renewal dates, you must tell the insurance company. And of course, banks don't tell you this. So let's just say your health deteriorates. Let's just say you've changed to a more hazardous job or a more hazardous hobby. All has to be declared, and you're never told about that. What else? Well, it's probably the worst offender for this is Sabadell, and it's in terms of selling lump sum life insurance on top of a mortgage. A most ridiculous practice. We've heard of payment protection insurance sold on top of loans, and this is similarly ridiculous. And what would happen is they would say, right, okay, well, one example we can give you, where a client took a 250,000 mortgage, was sold a policy of roughly 19,500 euros on top, meaning that over the whole term of the mortgage, it wasn't 19,500 he was paying, it was more like 31,080 euros. So just ridiculous practice. And apparently a practice that Sabadell tell me they've stopped a year and a half ago. I'm not quite sure on that. So more to follow in the next video.